Well, January was another volatile month for stocks. Investor sentiment turned negative on more bad news out of China, as well as plummeting oil prices. Well, let's talk about some of the month's major headlines. A first look at fourth quarter economic growth showed us that the economy hit a soft patch in the final months of 2015. Gross domestic product grew just 0.7%, which is a disappointing drop from the 2% we saw in the third quarter. Q4 GDP growth will be revised 2 more times as data comes in, and it's possible that the final result will be more optimistic. However, we're not expecting a ton of improvement. And we can attribute a lot of the economic slowdown to lower business spending, as well as weak global demand. However, the data also shows that U.S. consumers aren't spending the extra money they saved from gas. Now, although it's not great news, the slowdown doesn't mean the U.S. is undoubtedly headed for another recession. Keep in mind the economy went into negative territory back in the first quarter of 2014, and it bounced back quite rapidly. In other news, the Federal Reserve met in the last week of January and declined to raise interest rates again. That's not a big surprise given the challenging economic and market conditions, but some experts don't think the Fed made the right call. With so much uncertainty in the markets, a rate hike could have given investors more confidence in the economy. On the other hand, inflation remains low and economic growth is modest, so the Fed might hold off on further rate increases for months. Earnings season kicked off in January, and the overall picture is one of lower earnings and lower revenues. That's not a surprise because we know that American firms are facing major challenges from a slowing global economy, a strong U.S. dollar, and weak commodity prices. Although earnings and revenues are off, we have seen a few trends that make us feel optimistic. More than 2/3 of the firms that have reported so far have been able to beat their earning targets, which tells us that managers are doing a good job of governing expectations. Also, a gauge of manufacturing activity blew away expectations, and it came in at the highest reading since last January. Manufacturing, a backbone of economic activity in many parts of the U.S., seemed frozen after several reports that showed that factories struggled with demand. Now, this new data is a refreshing change, and we're hopeful about manufacturing this year. That's it for the January economic update. Please remember that nothing we talk about here is a recommendation. And if you have any questions or concerns about what we've discussed here, or if you'd like to discuss your personal situation, please give us a call at 480-422-8522, and we'd be happy to talk with you.